So, when you think about taxes, what's the first thing that comes to mind? Probably how much money you made, right? But what if I told you that for the IRS, the most important question isn't what did you earn, but who are you? Yeah, your identity, your status in their system, that's the master key that can unlock or completely lock down almost every part of your tax return. Let's dig into how this hidden system really works. Okay, let me ask you a question that sounds, well, almost silly. Can you claim your own child as a dependent? Of course you can, right? I mean, it's your kid. But in the world of US taxes, the obvious answer is almost never the right one. This simple question is actually a trapdoor into a whole labyrinth of rule. Because the truth is, biology and who the parents are, that's just a tiny piece of the puzzle. The real answer depends on this series of status-based gateways that you have to pass through. A bunch of tests that define who you are, where you live, and what kind of taxpayer number you have in the eyes of the IRS. So let's map this system out. Before the IRS even thinks about your income, your job, or your family, it has to put you into one of two boxes. This is the first and most critical gateway, figuring out your residency status for tax purposes. Literally, everything else flows from this one single decision. So, the IRS gives you two clear paths to be considered a resident alien for tax purposes. The green card test is super straightforward. If you have a green card, boom, you're a resident. The substantial presence test is basically a math problem. It's all about counting the number of days you are physically inside the US over a 3-year period. If you meet either one of these, you pass through that first gateway. Okay, so what happens if you don't pass either of those tests? Well, the system then defines you by what you're not. You become a non-resident alien. And this isn't just a label. It puts you on a completely different and way more restrictive track in the tax system. Failing to get through this very first gateway has massive consequences down the line. And that brings us right to the next gateway, which shows the first big consequence of your residency status. The box you were just placed in, resident or non-resident, directly controls which filing statuses you're even allowed to use. Look at this. If you're a US citizen or a resident alien, you get all 5 filing options. The whole menu is open to you. But if you're a non-resident alien, wow. The doors to married, filing jointly, and head of household, 2 of the absolute best statuses for saving money, are pretty much slammed shut. This is huge. Your identity as a non-resident has already limited your ability to lower your tax bill before you've even entered a single dollar of income. All right, let's move on to the most complex gateway of all, and you'll see how this all builds. This is where we finally get back to our original question about claiming your own child. See, it's not a single question, it's a gauntlet of tests, a maze you have to run through perfectly to claim anyone as a dependent. Before you can even think about your relationship to the person, you hit these 3 universal brick walls. First, you can't claim someone if you yourself could be claimed by someone else. Makes sense. Second, you generally can't claim a person who's married and filing with their spouse. And third, and you really gotta pay attention to this one, the person you want to claim has to be a US citizen, resident, national, or a resident of Canada or Mexico. This test alone disqualifies millions of people right off the bat. Now, if you clear those first 3 hurdles, you get to one of 2 paths. The first is for a qualifying child. But to make it through, you have to check every single box. There's a relationship test, a strict age limit, a residency test about where they lived, a support test about who's paying their bills. Miss just one and you fail. It's an incredibly precise and demanding checklist. And if the qualifying child path doesn't work out, there is an alternative for a qualifying relative. But don't think for a second this is an easier route. It's just a completely different set of 4 tests. They can't be a qualifying child for anyone else. They have to be related to you or live with you all year long. Their own income has to be super low, and you have to prove you provided more than half their support. 2 different paths, both incredibly specific. Now, after all those tests, you'd think you're finally done, but this quote right here reveals the final hidden gatekeeper for non-residents. Even if a non-resident alien from, say, France or Japan meets every single one of those tests for their child who is also a non-resident, this rule says it just doesn't matter. For most non-residents, the ability to claim a dependent is simply off the table from the very start. This single sentence is really the analytical climax of the entire dependent puzzle. So we've covered residency, filing status, and dependence. There's just one last piece of your identity that matters: the number you use. For those who can't get a social security number, the IRS provides a different key to the system: an individual taxpayer identification number, or ITIN. But as you're about to see, this key, well, it doesn't open all the same doors. So, what is an ITIN exactly? The most crucial part is right there in the definition. It's a tax processing number. That's it. It's not a work permit. It doesn't give you legal status. Its one and only purpose is to allow people to follow US tax laws. It's just a tool for reporting and paying taxes and nothing more. And the difference this number makes is profound. We are not talking about a small distinction here. This can be a multi-$1,000 difference. With a social security number, you get access to the big, valuable, refundable credits. With an ITN, you are explicitly barred from the earned income credit, and your child won't qualify you for the full, powerful child tax credit. The very number you use to file dictates your eligibility for major tax benefits. It's that simple. So let's pull all of these threads together. We've walked through this sequence of gateways, right? Where each step is a direct consequence of the one before it. It's a cascading system of identity checks that happens long before you ever get to calculating your actual tax. What we're really seeing is that the US tax system is an entire architecture built on status. Your tax journey is basically predetermined by these fundamental questions. Are you a resident or non-resident? What filing status does that allow? Can you even get through the gauntlet of dependent tests? And finally, are you using an SSN or an ITIN? Each answer sends you down a totally different path with vastly different results. Which brings us right back to where we started. After seeing how this whole system is built from the ground up on these layers of identity and status and residency, it forces us to really rethink the most fundamental question of taxation. Is it actually about what you earn? Or is the game truly won or lost based on who the IRS decides you are?